Excel accounting practice problem, adjusting entry related to depreciation. Get ready because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter transactions into it if you have access to it. There's two tabs down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. Let's take a look at it now. Recording the transaction related to depreciation, the actual journal entry, fairly straightforward journal entry. However, there are some more confusions to consider with regards to depreciation, including, do we want one depreciation account or multiple depreciation accounts? How do we want to be recording the property, plants, and equipment on the balance sheet and the trial balance? Do we want to net them together or be breaking out the book value for multiple categories? What should those categories be? Where are we going to get the subledger? Where should we store the data for the subledger? How should we be basically compiling our property, plants, and equipment over time? So let's take a look at a couple of those kind of questions up top. First, considering the furniture and equipment and the machinery and equipment. These are our two categories of depreciable assets that we have put in place. Now, note, first question is, well, what should the categories be for the property, plant, and equipment? In other words, should I just have one category that's going to basically have everything, property, plants, and equipment being long-term type of assets that typically include buildings, machinery, furniture, and so on and so forth? Or do I want to be breaking them out into multiple categories? And if I break them out into multiple categories, then which are the category names that I should be using? And oftentimes you might be working with your CPA firm or tax preparer to help break out the categories that you will be using, because the supporting data that you will often have with regards to property, plant, and equipment needs to be tracked in a subsidiary ledger, similar to what we saw in like the inventory or in the accounts receivable and accounts payable, more similar kind of to the inventory in that we actually have physical units of these items that we're talking about generally with the property, plant, and equipment. And we want to be able to track the actual physical units as well as the dollar amounts that are going to be put on the financial statements. Where are we going to track those? You'll note that we don't have a subledger that we put onto this worksheet. And that's because oftentimes you're going to track that in tax software. And the reason it's often useful for many companies to track it within the tax software is that the tax software is going to be required. You're going to be required, in other words, to record the depreciation on a tax basis in the tax software. So that means they need the whole subledger in the tax software, breaking the information out by category to apply tax depreciation schedules. If you already have the information in the tax software, then you can also use the tax software usually to make a book depreciation schedule if you choose to do that as well. In other words, your question for small businesses is often, do I want to have a separate depreciation for book purposes versus tax purposes, or do I want to just be on the tax basis to make it easier because I'm going to have to use a tax basis anyways? And either way, the tax software is usually a good place to go to get that subledger that will be backing up or supporting the amounts that are going to be on the trial balance. So the subledger might look something like this. This is just a mock subledger from tax software where we have our two categories. So now I can ask the accountant and say, well, what categories do you use? Does your tax software use? Does the tax code in essence use, or you use within it in order to group the property, plant, and equipment? And then I'll try to mirror my books in order to match the tax software in some way to make my adjusting entry process as easy as possible. And you could do that with just a total. If you just wanted to say, I got total property, plant, and equipment, and I'll just use the total that comes from the tax schedule, and then you have less detail on your financial statements. Or you can break out by category. In this case, we've got the furniture and fixture and the machinery and equipment. So I would then mirror those categories in my books. And then notice what we have the detail then, including the actual items, sofas, chairs, recliners, and so on and so forth. Machinery, we got a forklift and the office printer and so on down in that area. We don't need to have that detailed information reported on our financial statements. But we do need the backing and supporting data on the subledger, and that's going to make it possible for us to calculate the depreciation properly. It's also going to make it possible for us to do the disposals and sales properly, which is going to be important because it's tempting when you do the subledger, for example, to group some of these items together. If I bought the sofa and the chair and the recliner at the same time, to put them on one lump sum into the subledger. But if I do that and then I sell something in the future, now my subledger's got this big one lump sum. It's going to make it difficult for me to make the sale because I'm going to have to break it out because I only sold a component of it. So typically you want the detail broken out item by item of the furniture and fixture on the subledger also often being done on the tax return. Also note that large purchases like this are not things that happen every day within the business. So you can usually track it a little bit more easily than it might seem when you look at this long, kind of confusing subledger, because we didn't buy all this in 1 year oftentimes if you're looking at a long depreciation schedule, and the stuff that we bought in prior years will already be on the books from prior years, and we're going to still be using it because that's the nature of property, plants, and equipment. Therefore, all we have to deal with are the new additions in the current year. Make sure that we provide those to the tax preparer, as well as the disposals that happen in the current year, making sure we provide that to the tax preparer so they can then update the subledger, and then we can use that to calculate the depreciation. So let's go back on over to our schedule here. Then with regards to the recording of depreciation, remember that when we record these furniture and equipment and the machinery and equipment, for example, on the books when purchasing it, whether we finance it or pay cash for it, we put it on the books as an asset as opposed to expensing it at the point in time that we purchase it. This is an area that even if you're on a cash basis, you will not be able to get away from the accrual method in this case, because by us putting it on the books as an asset, that is an accrual method. When we would expense it if we paid cash for it, for example. If it was a cash method, we can't do that because the tax code is going to force us not to do that. And we wouldn't really want to just expense it generally because it's such an extreme case of something that we purchased in the current period that's going to be benefiting many periods into the future, that typically we're going to be forced to move away from a cash basis to an accrual basis method. So this is one area where you're going to have an adjusting entry pretty much no matter what if you have property, plant, and equipment. So then the next question, once you have the category set up, is that you could then record all of your accumulated depreciation, the contra account, into one account. For example, for even though you have different accounts for the asset accounts, you might just say, well, I just want one accumulated depreciation account. That means that you're not going to have the book value per category, but you'll just have the book value for the total property, plant, and equipment. And you can get that kind of like from the bottom line of your schedule, and that would make it easier but give you less detail. Oftentimes people will make an accumulated depreciation account for each of the categories of property, plant, and equipment, allowing you to then see the cost, the amount that has been depreciated, the difference between the two being the book value. So that's what we will do here. Then the other question is, well, what about the expense side of things? You could just have one expense for all categories of depreciation expense, which is, again, the easiest thing to do. Or you can have multiple expense accounts that would then be by category. And the expense, oftentimes more people might just say, yeah, I just need one expense account for the expense side of things. But you could break that out as well. We're just going to use the one expense account here. So that's some of the options that you want to basically be considering when you're thinking about the depreciation. Then just note that the recording of the adjusting entry is going to be very similar to what we saw with the prepaid insurance, except that we have this other account being a contra account. So in other words, when we put the prepaid insurance on the books, we said we're going to put it on the books as an asset instead of expensing it, because we have this prepayment that's going to be benefiting future periods. That's the same for the property, plant, and equipment, same kind of concept. And then once time had passed, once we consumed part of the insurance, we then reduced it with the adjusting entry and recorded the insurance expense down below. We're going to do a similar thing here, but then we do something funny. We don't just decrease like the furniture and fixture, for example, itself. We create a contra asset account, which is an asset account that decreases the asset balance, has a credit balance to it. And then we create that account. It's going to go up in the credit direction, and then the other side is going to go to depreciation expense down here. So that's a little bit different. You might say, well, why don't I just credit the furniture and fixture directly, giving us the book value directly, and then debit something like furniture and fixture expense, right? And we could do that, but one of the reasons we don't is because we're trying to say, hey, look, this is an estimate. This is an estimate. I don't know how long the furniture and fixture will last. I really don't know exactly what the value of it is at this point in time. All I'm doing is allocating the cost over what I estimated the useful life to be, and therefore I'm going to put it on the books at the cost and make another account estimating the decrease, allocating the cost over the useful life, and you can see both that detail, and you can then subtract the two out to get the net book value. So it gives more information, although it's also a bit more confusing and convoluted to do that, and that's often the trade-off that you will have between more data and more confusion. Okay, noting that, we're going to go back to the practice tab. We're going to enter the journal entries, which are pretty straightforward. We're going to go down here and say this is as of 2/28. We're going to debit the depreciation expense. So depreciation expense, which we don't have. I've got to add depreciation expense, so let's do that. Let's add depreciation expense. It's going to be in alphabetical order. I'm keeping it in alphabetical order. It's going to be after the bank service charge. And I'm going to make sure I select over here to this skinny cell, because I have hidden cells, and I want to make sure that my other columns over there, which are going to be the reversing entries, are fixed as well. They're going to move down as well. So I'm going to right click on those items and insert, shifting the cells down, and then we're going to name this depreciation expense. 0 starting point, ending point in place. Then let's record this out. We're in AF25 equals the depreciation. And then the other side, I'm going to start out with the depreciation, accumulated depreciation for the furniture and equipment. So this is going to be the accumulated depreciation for the furniture and equipment. I'll indent that second account, alignment and indent. Then we'll go over to our table. This is, we're imagining from the tax software. And again, this is the book depreciation. You might then have tax depreciation as well. The software can give you tax depreciation, and you might determine that you want your books on cash depreciation tax or tax depreciation schedule for tax purposes, and you might determine that you want your depreciation on a tax basis to make it easier. But we're going to use the book depreciation here, so we're going to assume this is our schedule to record it. We've got our total assets lining up to the 98,000 furniture and equipment. That should match what we have here. So we've got the 98,000 in that category. That looks good. And then we had the prior depreciation was at the 7,500. Now we're going to record the current period. Now notice that we're doing this problem on a monthly basis. I'm going to pull out the trusty calculator. And the depreciation schedules in tax software are typically designed to be on a yearly basis. So we're going to have to take the yearly depreciation over here and break it down to the monthly depreciation for 1 month. So I'm going to take that. Actually, 2 months have passed now, January and February. So 14001 divided by 12 times 2 would give us our 2333 about. 2334 about. So I'm going to go back on over here and say, all right, let's put that in place. We're going to say this is going to be 2334 about on the debit and the credit side of things. Recording that out, depreciation expense on down below. So the depreciation expense will be right here. This is going to be equal to picking up the 2334. And then the other side, and notice we were at before the 7,500. That's the beginning. That's this depreciation in the prior period, 7,500 current period, and we're only picking up then the 2 months of depreciation. So then I'm going to go into the accumulated depreciation. This equals the credit of the 2334, bringing the contra account from 7,500 up to 334 to the 9834. So now ending balance, this is what we purchased it for. This is how much we have allocated out to expenses. The differences between the two is the 88,166, that being the book value. So then we're going to do this again on 228, depreciation expense, same debit. Notice that we didn't make 2 depreciation expense accounts for the different categories. You could do that, but we're not as concerned down here as making the categories up top, so it will then be broken out on the balance sheet. So I'm going to go up top and say the second account is accumulated depreciation for the machinery and equipment. Debit or increasing that, and then we're going to say that's this category down here. We have these two items in it. It adds up to a total of $5,000 for the total cost. That should match what's on our books, $5,000 here. And then we had the current depreciation at the 833. That's a yearly amount. We got to break it down to 2 months. 833 divided by 12 times 2 gives us the 139 about. 139 about. So let's scroll on down and put this 139 on the debit and the credit. So that looks good. Then we're going to record the depreciation expense on down below in AM30. Something's in it. So I'm going to say F2 plus F2. I didn't hit the other F2. F2. And then pick up that 139. Enter. So that now at the 2474. And then the machinery and equipment up top, accumulated depreciation is an AM13 equals, scrolling down, picking up that 139. So there's the 139 there. So now this was on the books. We bought it for $5,000. We have expensed 139 in the form of depreciation. The difference between the two, 1486. Now this, when we do the actual financial statements and break this out on the balance sheet, we also have some confusion. This is where the most confusion is in terms of how do I record this, or how should I group this? What kind of indenting should I have? How should I show the book value? Should I combine accounts together, contra accounts in the asset area? So often a place of confusion when you're putting together or thinking about how you want to display the balance sheet. So we'll think about that when we put together the financial statements. So that's that, and now let's record it to our general ledger. I'm going to record both of these at the same time. I'm going to record the depreciation expense account first, so I'm going to make that green. So we got that down here. So depreciation expense, I think we have to add it too. So it's going to be after the bank service charges on the right. So we're going to go all the way to the right and say bank service charges is there. And we need to add, do we have any blank spaces that I should take care of? I got this blank space over here, I noticed, but it's kind of far away. Let's go ahead and fill out the blank space. So I'm gonna try to move this blank space over so I can fill out the blank space. So what I'm gonna do is I'm gonna say this one right here, I'm gonna cut it. You could just kind of grab it and move it. It's the same thing to say Control C or cut. And I'm gonna move that right here and Control V, paste. And then I'm gonna move this one up. I'm going to take that one, say Control X, not Control C, cutting it, and then Control V, pasting it. Let's take this one. I'm going to say Control X, cut, and Control V, paste. And then this one needs to move up. I'm going to say Control X, cut, Control V, paste. And then this one needs to be moved down there. I'm going to say Control X, cut, Control V, paste. This one needs to be moved up. So I'm going to say, where's my bank service charges? The bank service charges should be after the cost of goods sold. I'm actually going to move this one over. I'm going to say Control X, cut, put this one right there, Control V, and then I'm going to put this one up top, Control X and Control V. There we got it. So now it's going to be after the depreciation. So I'm going to copy this one to get the formatting, not Control X, but Control C and Control V to copy the formatting, delete the stuff in it, delete the content. And then we're in cell CW14 equals. I'm going to go left until I get to my depreciation account. So all the way on the trial balance, the trustee T to the B, trustee trial balance, picking up the depreciation expense. Looks good. The date's going to be, we're going to call it an ADJ. And then in CX17 equals left till we hit the wall. And then scrolling down and picking up that 2334. And then underneath it, we have another ADJ and CX18 equals, holding the left arrow down until we hit the wall. And then scrolling down to that second one. So there we have it. So now we're up to the 2473. That 2473 should match what's on the trusty TB trial balance. And so is that what is here? 2473 looks good. We also have to add it to our check numbers up top because we added that depreciation. So I should be out of balance here. And this one I need to fix too. So I'm going to double click on our check figure, go to the end of it and say plus, and then put the cursor back down in this big mess of a check fig. The check fig. And then we're going to go on down and say this is going to be the depreciation expense, the 2473, enter. So now we're out of balance there. This one's the check figure matching the GL net income to the trial balance net income down here. So I need to add it there too. So I'm going to double click on it, go to the end of it and say plus, and then scroll over to that depreciation expense again and add that to the check fig. Check fig. So we're going to, where did it go? There it is. I went too far. You've gone too far this time. This time you've gone too far. Go back. So there we have it. So now that 1324 matches the 1324 down here. That looks good. Now we got to record the other side to the ACCD pre. So I'm going to ungreenify these two. And now I'm focused like a beam of laser on this one. I'm like a laser beam focused. Here we go. Accumulated depreciation. That's going to be this account right here for furniture and fixture. So we're going to go to the right green account, right furniture and fixture. We're in the ACCD pre. This is an ADJ entry. We're in BJ17 equals left until we hit that wall. Scrolling down, we're going to pick up the ACCD pre-furniture fixture, bringing the balance up to the 9834. The 9834 should match what's on the trial balance here. The 9834 right there. That looks good. And then we'll record the last one down here. I'm not even going to make it green. I'm just going to ungreenify this one or bluify it. And then this one, the ACC machinery and equipment. That's the last green account on the trial balance. Last green account, therefore, as well. If I put it in order, which I had that last one out of order, but if it's in order on the GL, it should be the last green account too, the asset account. We're in BN, MUI BN 17. BN 17. Hippies are just being, man. But I want to be MUI BN. MUI BN. That's what I'm talking about. So we put that in cell BN 17, bringing the balance up to the 139. Scrolling back on over to the left, and we've got then our 139 there. So I think we're tied out. The check numbers are checked out, and we're good on the down low down here. So there is our trial balance. This is where we stand at this point in time. We do not have any reversing entry related to depreciation because it's a permanent difference. Note that we do have a significant impact on the financial statements from recording depreciation. And so that's one that oftentimes could either make people happy or unhappy, depending if you're talking about taxes. We usually want to look bad, having net income go down significantly to lower taxes. Or if they're trying to get a loan or something like that, when they're trying to look good or trying to impress investors and stuff, where they're going to say, do we really have to depreciate? I didn't pay the cash. Cash didn't go out, depreciate. And so, you can't win as the bookkeeper, or the accountant or whatever. There it is. There's our net income.